Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager here at FEG. Thank you so much for joining us and giving us a few minutes of your time. This week, we got a few things we're going to talk to you about. We're going to hit and discuss the healthcare sector. We're going to take a look at seasonality, specifically with regards to the election cycle. And then we're going to take a look at a very special Nasdaq rebalance, something that hasn't happened a whole lot. But Andrew will fill you in on that topic. So first off, we're going to talk about the healthcare sector. It is one that has struggled through most of the year, and especially here over the summer. Traditionally, as we go into the summer months, healthcare tends to be a better performer more times than not. It's more of a defensive mindset. But if you take a look at the screen here, we're going to put up the healthcare sector along with a few individual stocks. So the first thing is the orange line. That's the S&P 500. Then you could spot the purple, which is the healthcare sector. We do own Merck in several portfolios. That one has held up a little bit better than the overall sector. But one of the main drivers you will notice is the company AbbVie. That is the blue line. Their specialty drug Humira is going to face biosimilars. And so that is such a big piece of overall healthcare spending. And we ran across this stat, which I just found fascinating. Comes from the pharmacy benefit manager arm of United Healthcare, but specialty drugs, of which Humira is one of the big ones. Specialty drugs are only 2% of the total number of prescriptions, yet they account for 50% of total healthcare spending. Just a staggering amount. And just to think, I know many of you watching this probably take Humira or soon will be taking a biosimilar. So how does it affect you if you are not? Well, it impacts us all because the higher level of overall drug spending, if you're on an insurance plan, that is going to beef up expenditures. And so we all end up, in one way, form or the other, begin paying that price. So AbbVie has been struggling, and there's many others that are going to come under different structures here in the coming years or face new biosimilars. And many of these pharmaceuticals face ongoing, I'd say, negotiation/litigation with the government on Medicare spending. So that is one of the reasons healthcare has been struggling, and who knows, could be a good thing for most of us, as maybe see some kind of relief in drug price spending. Andrew, I'm going to pass it over to you and let you pick up the ball and cover where we're at in terms of the election cycle.
All right, thank you, Adam. We're not going to get too far into discussing politics or the election. Sadly, we're getting into that time of the every 4 years where we get closer and closer to the election. And while we don't let political noise or headlines infiltrate kind of how we're managing assets, what we do pay attention to is the seasonal price trends that surround the election. So it's been observed from every single election that we start to see trends in the market from each election year, that we start seeing the price go up and down during certain chunks of each of those the pre-election year, election year, midterm years. We start seeing trends there. And so with that, we start looking at the current year and start seeing, are we tracking traditionally how the market acts in a pre-election year? So the chart I brought today there's a lot of squiggly lines on here, so I apologize for being a little confusing, but each one of these lines is a pre-election year. The one in black, and I try to put a "we are here" sign there, that's our current year. That's 2023. And so we can see that for the first part of the first 6 months, we actually did a really good job tracking most of the other pre-election years. And what we want to draw significance to is traditionally in the summer for pre-election years, we do start to see an increase in volatility. Historically, we've seen many of these pre-election years start to see some weakness during those summer months, those July, August, moving in a little bit of September. We have seen some pullbacks there. Most notably, you can see the one at the bottom, that was 2011, and we saw the market decline just about 20% there. The positive takeaway from here is we do see in many of these years a year-end rally. When we look at November, December, we see that many of these pre-election years do see a strong finish for the year as they move into that election year. And then in December, we'll probably start talking about how the market acts in election years. But for right now, historically, we do see a little bit more turbulence in the summer that then leads to some strength in the year end. It's something we want to be cognizant of how the market's tracking these seasonal patterns, specifically the presidential pattern. The last point I want to share with you is something that we've only been able to observe one other time in market history. And so, whenever something pretty unique happens, we want to be really aware of it and have a close eye on that, as the market's not used to dealing with it. What I'm speaking about is the Nasdaq 100 will be doing a special rebalance. What that means is every year, the main indexes, we're right now going to be talking about the Nasdaq 100, will do a rebalance. For this one, it's traditionally done in December. Well, they'll reweight all the stocks. Ones that have gone up a lot will get kind of trimmed back down, back to their original weight, and they'll kind of rebalance, get ready for the next year. Now, when you have intra year, like we are in July, where you have a lot of stocks that have done a really strong performance, or maybe some that have really underperformed or really declined, they get away from their original weighting for that index. And so the institutions they'll say, okay, we're going to do a special rebalance. And that's what's going to happen here for the NASDAQ. This has only happened one other time, back again in 2011, when the NASDAQ said, hey, we've had two stocks in particular, actually three, that have really gotten away from their original weighting. At that time, it was Apple, Qualcomm, and Starbucks. And again, right now we're having, Apple is one of the ones that will get trimmed here this year. But we can see, how did those stocks perform, and then what are the stocks that get increased in weight? The ones that, as they decreased some Apple and Qualcomm and Starbucks, they actually increased Microsoft, Oracle, Intel, Google, and many others at a much smaller degree. But we can see here, how do these stocks perform? And what's really interesting is you'd expect the ones that start to get increase in weight, the ones in the bottom panel of that chart, actually performed weaker than the ones on the top. We actually saw the ones that saw an increase in weighting go down. You can see Google dropped 8%, Cisco dropped about the same, Oracle about 2%. It was really just Intel back in 2011 that did really, really well. Meanwhile, the stocks that got cut because they had gone up so much, Apple did have a slight pullback. It declined to roughly about 10%, but over the next several weeks, it actually was up a little over 1%, as you can see on that chart there. This is very much in line when we see stocks get added or subtracted from an index. Historically, when stocks get added to the S&P 500 or the Dow Industrial Average, it's actually been kind of a death knell for those companies, as they historically have had a rougher time performing than before they got added to those indexes. So we're going to see a big rebound at the end of this year. There's going to be a lot of buying, a lot of selling, a lot of institutions, a lot of ETFs that track this major index are going to have to reevaluate their own weightings, and that's going to cause a large increase in volume, a large increase in activity, and we don't have a lot of data to go off of when this is done in the past. Again, it's only been done one other time. And so we want to be aware that there's going to be kind of this shakeup, this stirring of the water, so to speak, later this month as the NASDAQ begins to rebalance. So the question that we get asked, is this a positive or is this a negative for the market? Again, we can't be definitive with that answer. One possible positive here is, as some of those larger weighted holdings, the ones that have done really, really well, the Teslas, Nvidias, Microsoft, Apples, the ones that have really been driving the gains this year, as they get kind of pulled back to the original weighting, it may allow the NASDAQ to be less reliant on some of these larger holdings, and kind of trimming them back to the original weighting could be a market positive. At the same time, you're going to have some forced selling in some of these names that could cause some short-term volatility. Again, we're very much focused on the intermediate and longer terms. We're not too concerned with day-to-day gyrations, but this is something that definitely will likely bring in some volatility in both directions, as some stocks do get increased in their weighting later this month when this happens at the end of July.
Yes, and thank you, Andrew, for that reminder that these election ads are basically on our doorstep. Something we're
I
all
hate
in the
to
same.
say it.
Yeah, well, it's one thing both parties can unite on. We shudder at the thought of reliving that every 4 years, and even every 2 years in some cases. But I do appreciate the trends, and appreciate all of you giving us your time covering these points, like we do every week, every Thursday in your inbox. If we can be of service to you, please give us a call, 800-928-4001. That's whether we work with you now or you would like to work with us in the future. Thanks again, and have a great weekend.